Good afternoon, ladies and gentlemen, and welcome to the Hotel CHOCOLAT Group PLC post-AGM investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab that's situated on the right-hand corner of your screen. Just please simply type in your questions and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard and will notify you by email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be very grateful. And I'd now like to hand over to Andrew Geary, Non-Executive Chairman from Hotel CHOCOLAT. Good afternoon, sir.
Afternoon, thanks, Mark. Good afternoon, everyone. Thank you very much for joining us. First and fast introductions. So to my right is Angus Thirlwell, our co-founder and CEO, and Matt Pritchard, our CFO. And just off camera, we've got Peter Harris, our other co-founder and development director. And we've got our two non-exec directors, Sophie Tompkins and Greg Hodder. If we've got any really awkward questions, we'll pass them across to them and drag them onto the camera. We're hoping to cover a short presentation, probably 10 to 15 minutes, which Angus and Matt will take you through, and then we'll do a Q&A session. So we should have another 15 minutes or so for that. And Mark's already given you directions on how to provide us with the questions. So thanks again, and I'll let Matt and Angus carry on.
Thanks, Andrew. So we've got a presentation deck to run you through here. I'd like to point out there's no new information in here over and above what we put out into the public domain for our end-of-year results, but it provides a good context setting of what sort of brand we are and where we're intended in getting to. So quick recap. We've built up a lot of momentum in the business. We're in full flight evolution from a UK store-led brand into being a more digital-led and globally ambitious brand with a broader range than previous of luxury cacao products. We've raised capital, which we're deploying in service of that growth, and particularly investing in capacity and infrastructure sufficient to take us to 500 million of sales from our, which is quite a good growth from our existing level. You can see the performance in revenue and underlying EBITDA really coming back into the pre-COVID shape again, and profit before tax. So this is a year where we were still weighed down to a certain extent by dealing with the pandemic, and but I hope you can see that it didn't hold us back too much. So moving on to the brand and operational highlights, we have 6 fast growth drivers which are behind the strong growth rate that Hotel CHOCOLAT is delivering at the moment. And if I just touch on each one in turn. So digital, we were born a digital brand when we first set Hotel CHOCOLAT up, and it's always been very much at the heart of the business. What we've seen is really a faster growth takeoff from the investments we made in building our database and building out our direct marketing team before COVID, and then we undoubtedly have seen a bit of a kick on because of changed consumer pattern over that period. The Velvetizer is our in-home hot chocolate drinking system, and that's giving us a high lifetime value continuity model, which we're deploying at full pelt at the moment. The loyalty scheme that we've got was fortuitously put in place just before COVID, and that gave us the ability to talk to broadly half our retail customer base and stay in touch with them while physical shopping was not possible. Many of them converted over to become online shoppers and discover what else our brand can do for their family. The USA and Japan, our 2 new big markets, are throwing off exciting growth rates, and we're building behind those models to scale up and make the operational execution of those models work in tandem with the growth of the business. Global wholesale is the final one of the 6 fast growth drivers that overlay the ongoing business model. And there we've really seen a lot of success with our strategies of adopting capsule ranges for different, primarily digital partners, and also pushing our alcohol and in-home drinks categories. So, Matt, would you like to cover the right-hand side?
Yeah. So in terms of, I guess, the ongoing growth prospects and sustainability of the brand, the core and unchanging brand values of authenticity and originality and ethics are really still at the fore and are driving a lot of innovation and further growth. Really big milestones in the period was the design and completion of our new gentle farming charter, a very significant investment in improving the livelihoods of the cocoa farmers that supply us and their families. That broadly takes us to something close to an industry-leading position, paying more than fair trade for our cocoa, and for getting very heavily involved in understanding how we can also make practical steps on the ground to improve the sustainability and climate resilience of cocoa farming. So a really big scheme just launched at the end of that period. It will really start to support our brand going forwards. A lot of innovation continuing, the launch of the new coffee range with the recyclable pods. We've got coffee machines now starting to launch as well. We've had some very significant range redesigns as well, with our Christmas and our year-end box gift ranges getting a refresh, which has significantly boosted sales as well. We're making great progress on our sustainability pledge around the planet in terms of the recyclability of our product. And in the year, we celebrated our real focus on people, manifested in the form of achieving our highest ever all-employee engagement score as well. So both achieving the strong growth on the top line and the return to profitability driven by the growth strategy, and supporting that with a strong focus on sustainability and values as well. We don't propose to go through the rest of the slides in this deck, given that it is the one from the results roadshow of about 6 weeks ago. So hopefully you've had a chance to see the rest of the slides before. It goes through each of those business units and growth drivers in turn. It outlines a bit about the investments we're making in our operation in terms of increasing our manufacturing capacity in the UK, investing in our digital services, as well as investing in our cocoa supply. And in terms of the recap on the outlook is broadly unchanged, that the business is trading in line with expectations, and we remain very confident that those growth drivers can continue to take us forwards. So should we move on to questions?
I think, I think really we wanted to make this a very open forum and answer questions that are, pertinent to where Hotel Chocolat is right now. And I can see they're coming through thick and fast. Should
we start with these first?
Should we start with the pre-submitted questions?
We had some questions pre-submitted.
Yeah.
So if I read them out, and then we'll find a suitable person to answer them. So the first question which we received was, which countries are you targeting for future expansion?
So in terms of the markets we're in at the moment, the USA and Japan, they're both extremely attractive markets where not only is the population and the demographics large and attractive, but gifting behaviours in those markets are even more intense than they are in the UK. So the market headroom that making a success of those two markets would offer is very significantly larger than the size of the whole business in the UK at the moment. So right now, we don't need to go into any further markets in the fullness of time as the US or Japan start to reach maturity. There's lots more opportunity, but even if just one of those two were to reach its full potential, there's many years of future growth come from just those markets. So we try to stay focused on making what we've got bigger and more successful.
Yeah, well done, Matt. Okay, our second question that was similar is, how much growth is there left in the UK market? Angus, you got thoughts
Yeah,
on that?
I prefer answering that. Well, short answer is stacks. We know that we address currently three big markets. One is the broad gifting market, which is bigger than the second market we address, which is the chocolate market. And then we also are able to play in the out-of-home leisure market. When you wrap all those up, there's at least 20 billion pounds of addressable market. So we're really are, at the in the foothills of where we can get to. I think the shape of the business has also changed quite rapidly in the last couple of years. The in-home drinks element of the business is shaping up to be a significant material profit and sales driver, and that's another market. Then the alcohol range that we've got, that's obviously tapping into another huge market. So that the addressable markets are growing probably at a faster rate than the business is. So the actual amount of headroom for us to go at has increased over time rather than decreased.
Thank you. So our third question that was submitted starts with some lovely comments to everyone here at the team, and congratulations. So we are pleased to receive those. But the question that followed was, how is the relationship with Clano, given that it has attracted some negative press with regard to encouraging debt? And I think Matt is probably best placed to answer that.
Yeah, so Clano is a proposition that we added onto our website offering as we moved into some, I guess, slightly higher ticket items. It attaches to a very, very small percentage of our overall sales, and the way the model works is the consumer has the chance to buy a product and to either pay 30 days later or to split it into 3 payments. There's a split between how much of that they take up. The key thing, however, is that the interest costs of that credit are borne by the company, not by the individual. So they still pay the same price for the product. We're not profiting from selling credit to anyone. It's a case of just helping people to manage their cash flow with ourselves bearing the cost of it. So it is relatively modest. We'll keep an eye on kind of consumer feedback, but at the moment, consumers seem to be appreciating that we offer that service.
Yeah, thank you. The fourth question we were submitted is, well, I'll try and paraphrase this really, but it was really noting that we were expanding, but there was a lack of shops in some areas, and the areas that were highlighted were northwest. So from Bradford to Carlisle, and then further west to Leeds, Harrogate. And so we're probably going to drag Peter Harris across to the camera to answer this. Whilst Peter does that, we'll just know that Peter's been leading the charge on the company's Movember effort. So you'll see a newly styled Peter Harris as he comes across with his moustache.
Good afternoon. The question about taking on new shops is an interesting one, because where we can make good returns, we're very interested. That presupposes good demographics and good population, and the areas that were referred to in the question I've looked at, because from Bradford north to Carlisle we haven't got any premises, but there was Kendal. I've looked at Kendal, but I'm not convinced it's quite right for us at the moment. Having said that, we are keen to expand. We've already opened in Edinburgh in the new St James's centre. We've also opened in Sydney at our factory shop on the A1. But we've also been looking and concentrating a little bit more on upsizing where appropriate. So we've recently upsized in Harrogate, where we've gone from quite a small location to one with the new cafe format. And also we've upsized on London Bridge Station. So hopefully any of you who are looking from London, it's well worthwhile going to London Bridge. But Also, Waterloo, we've relocated to a much better location. And this is to some extent led by the fact that we're a very good tenant, and landlords are very keen to have us in some of these better places and better locations, albeit at a much lower rents that have been driven down by the pandemic in the last 2 years of structural change in the retail market.
Yeah, great, thanks. We're just going to check our very small screen here to see if we've had any other.
Who's got the best eyesight?
It's probably me.
Yeah, probably you.
So there's a couple of questions really around supply chain, commodity pressures, wage pressures, and the like. That sort of, and also, will we have enough stock for Christmas? So, shall I take the cost pressures and you talk about the stock for Christmas?
Yes,
Yeah.
good balance. Yeah.
So undoubtedly, we are seeing some costs. We do have the benefit of being vertically integrated, so we can mitigate some of that through planning and having bought ahead. The other key thing is we are very focused on making sure that ultimately customers need stock for Christmas, and we make that stock ourselves. So it's better for us to take a little bit of cost inflation in order to make sure we've got the product around us to sell. We have been very restrained in terms of passing any cost increases on to customers over the last 5 years. We typically only make price rises when we improve product, and we've just done that with the Christmas and the year-round core box ranges, our two largest categories. So that was the right time to make an increase in those. So broadly, price rises for consumers for better product are matched by the cost inflation pressures that we've seen at the moment. So we are spending a bit more, but it's a manageable pressure for us at the moment.
Yeah. I mean, in terms of stock, I think there's been a lot written about supply chain disruption and the scarcity of some product lines from some brands. We took the decision early on to really stock up for this Christmas, and you can probably see from poring over the back half of the annual report that we entered the new year with significantly higher inventory as a deliberate act, and that means we're approaching this peak Christmas period with an amazing product lineup, approximately twice as much stock as we had last Christmas. Bearing in mind that we did sell out on many lines during December last Christmas, so a part of it was kind of correctional, and the other part is an ambition for growth and making sure we have enough of the hot products that our customers want. So in short, we're really well set from a stock point of view.
I think it's another question that I think you've already partially answered about sort of UK headroom, but given that there is UK headroom still significantly, why would we be pushing aggressively on international growth?
Yeah, I can probably, I'll start answering, but you've got great international experience, Andrew. It'd be good to hear from you. But everything we know about international is you can't rush it. It takes time, layers and layers of learning. And if you rush it, you make expensive mistakes. So we're firing up those new markets in anticipation of the UK at some point stopping being the only market we operate in, of materiality. And we wanted to reflect the fact that the business had reached a stage where the brand and our product range was strong enough to be able to make an impact in these new markets. So we decided to make that move, and we're in beginning year 4. We've learned a lot. We've been testing, learning, correcting, applying relentlessly. But the key message is get them started early enough and don't rush it. Andrew would like to.
Yeah, I wouldn't add much. I think it's exactly that. They take a long time. And so to go in early and take the time is sensible. And this team's got a very long-term view of the brand. So that time's available to do it properly, embed the culture in those different places, and learn, are there differences, are there different languages to cope with, and different supply lines, and even different product mixture. So yeah, I think that's a sensible approach. But as Matt pointed out earlier, a lot of headroom in the two markets there, so lots to go after.
There's a question here that, given there's a lot of competitors out there, what is it that makes Hotel Chocolat stand out from the rest?
Well, there's a lot. We keep a rate card in our heads of the layers of differentiation we have compared to our most obvious competitor set, which are other chocolate brands. In brackets, that's only one of the markets that we operate in, so it's not the full answer. But I think the question was probably posed thinking about other chocolate brands, so I'll answer it in that spirit. First of all, we are, in terms of our values, an end-to-end agriculturalist, manufacturer and retailer. And with that knowledge, we're able to go about things in a more ethical approach and a more considered, conscious approach. The Gentle Farming initiative that we've launched is going to up our cocoa sustainability program to be industry leading. And it's something that we've been working on for about 15 years, learning about being a grower ourselves, figuring out what the challenges were for cocoa farming families to try and make a decent living, and then applying everything we've learned into this large scale program. So ethics is number one. Number two is originality. We're a creatively driven chocolate brand. We have a lot of new products coming out. We've innovated in ways that have turned the market around, and we're a difficult business to compete with. Being a prolific ideas business means we can excite our customer range, our customer set. We've always got something to say, and we can also push out into new categories when people like the brand but are looking for new gifts to give to people that they have already gifted Hotel Chocolat to in previous years. The third element is that we're the real deal, and we're truly authentic in revering the cocoa bean. If you check out the ingredients set of our scaled competitors, you'll typically see the largest ingredient is often sugar, which is the cheapest ingredient. With us, as far as chocolate goes, it's always cocoa, and that gives us a differentiated taste. It gives us a different kind of loyalty response from customers, and when you wrap all that up together, we're well differentiated, and we tend to hold on to our customers in terms of loyalty.
There's another one here. I might need to move the camera back to Peter, but have you ever thought about Christmas pop-up shops? These might mean you could try before you buy and commit to certain towns and cities.
We actually have tested out pop-up shops before. The cost to do them is actually surprisingly high, because you have to consider different elements of the costs, including storage. So I think you might be referring to the pop-ups you have in shopping malls. It's not that straightforward. It's difficult to get really good branding, and it's something that we would prefer to have a really good presentation in a really busy mainstream location, which is where we try and select for most of our locations. We do also have the Chocmobile, which gives us branding in a different environment. So currently that's in London at Somerset House, where there's an ice rink as well. But pop-ups, it's something that's can work, but for us, we weren't happy with the results. So we prefer real shops, which we've committed to.
It is true to add as well that we've been successful in getting more flexible leases with break options. So in the unlikely event that we go into a location and actually, despite all our best efforts, all our best research, all our best data, we can't make it work. We're not signed up for 10 years straight anymore. the property market has changed, and we can now get sort of reasonable break options, which brands need to have, really, don't they? I mean,
yeah, we have of our 120 sites, we have something like 80% of them have either a lease expiry or a lease break, which gives us tremendous flexibility. And that's not flexibility to come out of a location. It's more that it gives us the flexibility to upsize if we're able to, or choose a better location. And that's been very, very useful in the last 2 years.
And there's another question about the overall pace of store rollout and store numbers. So in terms of where we've got stores at the moment, we've got, as Peter said, 120 in the UK, approximately 30 in Japan right now, 4 in the US, slightly different growth approaches in each market. The UK, more about specific attractive opportunities, or particularly upsites and relocations to better, more prime locations on better deals. Japan, having got to a scale that is appropriate to have a supply chain that can operate efficiently and effectively. That's about making sure that we can now generate returns that could then push that on to a faster rate of rollout in future years. And in the US, building on all of the digital learnings we made in the UK, both before and through the pandemic, the US is very much about digital growth for the next few years. So different blends of digital and physical retail expansion in different markets based on what's right for the consumer and what's driving the return.
Yeah, I think it's one of the strengths of the operating models that we've got in the business, that we're able to dial in a different market approach strategy for each market condition and different stages of maturity as well. So yeah, you're seeing that the three different markets, 3 different approaches, same brand, largely the same product range, but playing to the multi-channel strengths of the business and flexibility.
I think that's the end of yeah.
Andrew, Angus, Matt, thank you ever so much for updating investors, and thank you to all those investors that have taken time to submit questions this afternoon. If any further ones do come across the panel, we'll make those available to you for your review. So once again, thank you very much indeed for your time, gentlemen, this afternoon. Ladies and gentlemen, please could I ask you not to close this session, as we'll now automatically redirect you for the opportunity to provide feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued and welcomed by the company. On behalf of the management team of Hotel Chocolat Group, I'd like to thank you very much indeed for attending today's presentation. That concludes today's session, and good afternoon to you all. Thank you once again for your time.